Hello, welcome to this next panel. I'm really excited about it because we're looking forward to the future. And one thing that has really struck me so far listening to the other panels is the power of our existing social insurance system to not only cross across generations, but also racial and ethnic groups and income levels. But also, we're hearing about the shortcomings of reaching across all of those different divisions. And so our next group is going to talk to us more about how to bridge those divides and reimagine what social insurance can look like in the future. So first of all, I just wanted to share a couple of my observations about how social insurance does bridge the divides that we have. One is that social insurance programs are typically universal or near universal. And so they typically don't exclude groups of people. And I thought EJ stated that so well early on, talking about Social Security, that though we imagine it to be sort of a program for the elderly, it really serves people of all ages, including 6 million children are supported, either by Social Security benefits in their own right or in their family. And EJ was, one of those children who received Social Security benefits. Another point is that social insurance provides protection for all of us, whether we have met one of those insured events or not. So Social Security protects me right now, just in case I lose my job, I would get unemployment insurance. Social Security disability insurance protects me in case I become disabled. And that protection is really valuable even if you never end up needing it. Finally, I thought Renee brought up such an important point that social insurance really helps relieve all of us of the responsibility of supporting family members who experience one of these life events. And I think I'm not alone in having a family member right now who is receiving pandemic unemployment assistance, and my brother. And if my brother was not getting those benefits, then he would probably be struggling to meet his rent and to raise his child. And probably some of that burden would be on me or on my parents. And so because of social insurance, we are relieved of that burden. So even if we're not beneficiaries ourselves, we all benefit from it. So those are just some of the reasons that the majority of Americans of all ages and of both political parties strongly support social insurance. Social Security consistently polls as the most popular government program. Pandemic unemployment insurance is kind of a star of this recovery, and obviously it's very contentious whether it will be renewed beyond this week. And so these are contentious issues, not just pandemic unemployment insurance, but social insurance in general. And it struck me also as I was listening how many gaps remain in our current system and how we might close those gaps. And that's what we're going to be talking about in this panel. A couple of things I just wanted to pull out as we go into it. Right now, we're obviously having a national reckoning over racial justice, and we've already discussed some of the racial disparities that exist within these programs. Michelle brought that up. We're also celebrating the 30th anniversary of the Americans with Disabilities Act, and the promise of that legislation, and also how long we have to go. And Lily did such a wonderful job illuminating that in her remarks. And then of course, the pandemic has laid bare some of the major gaps. One of those is that we went into this crisis with no paid family and medical leave program to allow people who even to take one day off to get a coronavirus test, or to take months off to deal with childcare and school closures for family caregiving. So that's a huge gap that we're grappling with now. We went into this with nothing guaranteed, and what Families First provided is now expiring for many people. So this is a really important conversation, and the Academy has really been a leader in it, and in really radically reimagining what social insurance will look like. And both Sam and I are on a year-long study panel about reimagining social insurance to provide something like a universal basic income and assured income, and where that might take us. So with that, I would like to introduce the three fantastic panelists. First of all, Sam Hammond is the Director of Policy and Welfare Policy at the Niskanen Center, and a member, as I mentioned, of the Economic Security Study Panel. He's going to talk about that panel's work on funding social insurance, which is obviously really important as we think about reimagining social insurance. Next up is Walt Dawson, who's an assistant professor at the Oregon Health and Science University. Walt has been a great collaborator on the Academy's caregiving work and has extensive expertise in the healthcare and social insurance field more broadly. And then finally, Felipe Juan, a summer intern at the Economic Policy Institute, as well as a PhD student at Howard University, is focusing on labor and urban economics. He's going to talk about EPI's extensive research on the changing nature of work. So with that, each panelist is going to give a presentation. I'll ask some questions, and then we'll open it up for audience questions.
Thank you for having me. Before I sort of talk about the specifics, I want to create I want to emphasize an analogy between social insurance and the systems of social insurance and public infrastructure. So, we think of roads and bridges as a form of infrastructure, but we sometimes miss the extent to which social insurance systems are themselves a kind of public infrastructure. We're seeing that right now with, the discussions around paid sick leave, where it's not just, a nice thing to have, but a critical source of, a critical piece of a public health response. And, unfortunately, just like, the Academy of Engineers every year puts out a report saying we get a D rating for our roads and bridges. We're definitely, living through this crisis, realizing that we have an F rating when it comes to our social insurance infrastructure. So just to, run through the obvious examples, when in March and April, when the COVID crisis was just coming on and starting to affect employment, we saw record levels of jobless claims every Thursday. More unemployment in a week than we would have in months during the Great Recession. And of course, state unemployment offices were just overwhelmed. And the reason they're overwhelmed, again, goes back to this point about infrastructure. The unemployment insurance system was, developed in the 1930s, but a lot of the actual systems, the actual, substrate that they run on, dates back to the Kennedy administration. And are programmed in Fortran and COBOL, these ancient programming languages that are kind of the equivalent of Latin. Were designed to interface with old punch card machines old mainframe computers that they have certain benefits, but not when you want to change them. And right now we're going through a congressional negotiation where, Republicans are asking for unemployment insurance to be pegged to wage replacement, which sounds, perfectly reasonable until you realize that for many states that is, literally technologically infeasible. Then we move to, the Paycheck Protection Program, where many other countries, had very similar economic shocks as we did, and yet, whether it's the Netherlands, Denmark, Canada, they managed to implement an emergency wage subsidy, basically direct payroll protection, and they managed to get those off the ground in a matter of weeks. The Paycheck Protection Program, meanwhile, tried to accomplish the same thing, but because none of that infrastructure was in place, they kind of had to, on the fly, develop a convoluted Rube Goldberg machine of bank loans to small businesses that would be forgiven if they kept their employees on, yada, yada, yada. And even that ran into, enormous technical difficulties. This gets into a bit of the weeds, but the SBA has a sort of the analogy for loans, what the unemployment processing system is, the claims processing system is for UI. They have a system called E-Tran, and E-Tran was flooded just like UI offices were, and the entire system crashed for about a week. And then it wasn't until they contracted with Amazon Web Services that they got it back up and running about, less than a week before the program was out of money. So we're starting to see the consequences of our radical underinvestment in the actual infrastructure of social insurance. We can discuss, what kind of benefits we need as a country, and the scope of those benefits. But at a foundational level, the very infrastructure itself is crumbling. It's as if we had a highway, an overpass that seemed sound until everyone and their grandmother had to cross it at the same time, and it just fell on top of the road below. Looking ahead, I think in the same way that when we upgrade a bridge, we don't just rebuild the bridge. We can also think about improving its structural integrity, adding new lanes, maybe replacing the whole thing with high-speed rail. When we talk about social insurance infrastructure, we can also have a similar sort of forward-looking vision to, not just modernizing, quote unquote, but trying to improve the infrastructure such that we can do more things with it, right? Venture capitalist Mark Andreessen wrote this really widely shared essay, sort of written in a bout of anger and frustration, called "It's Time to Build." And in one of the lines in that essay, he says, a government that collects money from all its citizens and businesses each year never built a system to distribute money to its citizens when they needed it most, right? And you even see it's sometimes said that for all the problems that plague the public sector, at least the government is good at sending checks. And would that be the case in the United States? That would be wonderful. Even the $1,200 checks that many people received, ran into immediate difficulties when you realize that nearly half of working age people don't regularly file federal income taxes. And so we ran again into a kind of crisis mode where the IRS was called back. Apparently they had, teams of 10, the IRS has about 50,000 something employees just on the federal side. And, they still took weeks to put out a simple website where you could, input your direct deposit information and so forth, even though the Social Security Administration and state and local governments have the vast majority of information you need to identify every household that doesn't file taxes. But rather than go that option, we sort of had to stick with the mythology of this being a tax cut rather than a direct payment. And looking ahead, I think we would do we can, like I said, we can debate what kind of programs we want, but underlying this, there needs to be massive investments in the basic infrastructure of social insurance. We need it. We need the capacity to, whether or not we want a full-blown UBI, we need the capacity to at least reach every single household, reach every single employer, and the systems that we do have need to be robust enough to both change and be nimble and flexible, given radically different circumstances, but also just to be robust to the amount of congestion and inflows that that this crisis has shown are possible. And just a final thought on this point. This stuff often doesn't get press, right? Because it can be very technical and modernization, IT systems. That never makes the front page news. But there needs to be people working on these issues because they are what enable all the other goals to come to fruition.
Hello, good afternoon, everyone. Walt Dawson, I'm assistant professor at Oregon Health and Science University's School of Medicine. I'm also a senior Atlantic fellow for equity and brain health at the Global Brain Health Institute at the University of California, San Francisco. My research and work really focuses on how to better support both the health and long-term service and supports needs of people living with cognitive impairment, particularly individuals living with Alzheimer's disease and other forms of dementia, as well as their family care partners. And historically, my work is also very much focused on why we as a country don't really have a more robust long-term service and supports system in place in the United States. And my focus on this topic is really comes from a personal experience as being a family care partner when at a very young age when my father was diagnosed with Alzheimer's disease, and kind of really early on in my life witnessed firsthand the many kind of failings and challenges that our healthcare system, and in particular our long-term service support system, has, including with Medicaid. And so while my work now also is very much kind of on research and kind of within the academic space, I also work kind of directly in public policy in DC and as well as the state level in Oregon. So that just kind of frames the research and work that I do. Just a bit of background, the long-term service support system in the United States is highly fragmented and quite frankly, I would say insufficient to really meet the needs of the 12 to 13 million people that need some sort of form of long-term services supports. The majority of individuals are of advanced age or over the age of 65, but there's a significant number who are younger and under the age of 65 who need some sort of supports as well. The main payer, of course, for public payer of long-term services supports in our country is Medicaid, but how Medicaid specifically works at each state level looks a little different. So that kind of lends itself to that fragmented system. But certainly, in addition to Medicaid, there's significant out-of-pocket or personal costs associated with providing and needing long-term services and supports. So I would say that the kind of COVID-19 pandemic has really laid bare many of the challenges and again, quite frankly, the failings of the system and of many of our social support systems in this country, but specifically long-term services and supports. And many of these challenges are historical and deeply systemic in their roots, and they are not new. They've been problems for a very long time. But I do think that the attention that COVID-19 has kind of brought to greater calls for equity, as well as attention to long-term services and supports, and particularly to nursing facilities and nursing homes specifically, that we really have an opportunity, I think, as a country and as a society to really rethink our programs and really kind of push for some comprehensive reform and changes. And, you know, I think there have been clearly other moments within U.S. history where there's been a crisis, usually economic in nature, that's been a catalyst for significant new social policies. The two best examples, of course, being the Social Security Act in 1935, which led to the creation of Social Security and our nation's first national social insurance program, but also the Affordable Care Act in 2010 in the midst of the Great Recession. This was certainly not social insurance, but it was the most significant change to our nation's healthcare system in over a generation. But I think in thinking about new policies and approaches, I always tend to think about how we can better support family caregivers, just because that's kind of much of the focus of my work. And I do think it's notable that in the last few weeks, there's been some proposals out there, such as Vice President Biden's recent proposal that he released on family caregivers. And interestingly, it's not just focused on the needs of kind of individuals of advanced age and long-term service and supports, but it takes more of an intergenerational approach, and it's focused on both kind of early life care needs and as well as kind of long-term services and supports. And I would also note the Academy's 2019 report, Designing Universal Family Care, which you have to say I really appreciate this report because of kind of its holistic approach that it really takes to caregiving across the lifespan. The report, really provides, I think, some really excellent recommendations, particularly at a state level, to better support, early childhood care and education, as well as long-term service and supports, but also paid family medical leave, which, clearly has been a very important issue and topic in the midst of COVID-19. But I think this more kind of holistic approach to providing support for families is kind of where we need to be thinking, and rather than necessarily just kind of focused on specific pieces of the system. And there are other proposals out there, certainly, too, that could really have, I think, a positive impact in this space, such as Medicare for All, right? Although this takes more of a national or federal approach to addressing the issues here. And this, Medicare for All has been really proposed as a way to cover the healthcare needs of a much broader segment of the U.S. population, rather than just, as Medicare now is focused on adults 65 years of age and older, and individuals living with certain disabilities, but really making it more broadly available to a wider segment of the population. And I think there are really good reasons for why the Medicare is a good approach, or a vehicle, so to speak, for reform and expanded access. And one being that it is a near universal program. It's not income-based, it's not means-tested. But there's also the further benefit that Medicare is a generally popular program, and I think that combination of the near universality of it and that popularity of it is the real strength for the long term. But there certainly are some real political considerations in the near term with Medicare that make it challenging. Don't want to skirt over those, but I do think that perhaps the new kind of environment or terrain that we're in with COVID-19 may kind of change that dynamic a bit. I would say, though, with proposals like Medicare Advantage, or excuse me, Medicare for All, is that most of the proposals that I've seen have had, to some degree, some discussion or engagement with long-term service and supports, but to what level what that looks like kind of varies, right? I mean, some of the proposals have kind of focused on in-home care services only, whereas others kind of do include the kind of full continuum of long-term service and supports needs, including kind of institutional or congregate care settings. And I think, I would say, for me, the kind of broader approach that includes kind of all levels of care is really, again, where we need to go, and be thinking about that more holistic approach, and certainly not just necessarily the in-home supports, but kind of this continuum of services that's available. So I think that, we really kind of find ourselves in a different space than we did even just 6 months ago, right? In terms of thinking about these programs and what opportunities there may be for change. And, I do think we just have a real opportunity right now to really think through how we move forward and really take a much more holistic and equitable approach to thinking about providing health and long-term service and supports coverage.
Hi, everyone. Thank you, Sam and Walt, for those insights. As mentioned before, my name is Felipe Juan. I'm a second-year Ph.D. student at Howard University, and I'm currently doing an internship at Economic Policy Institute. And I'm going to bring a little bit of highlights of what we've been doing and the work that's been going on at EPI regarding like the gig economy and the evolution of work altogether, and how it's become more automated. We have all these processes that have occurred through technology, a lot of changes in our economy to get all together. And there's estimates of about 55 million gig workers. One of the questions that I think we talked about here is what can we do next? Going back to that analogy that was mentioned earlier about infrastructure, one of the things about adapting is important. And so our infrastructure needs to adapt towards these gig economy workers, especially those, most of which do not have any kind of benefits in terms of healthcare or retirement allocation. So we need to really start thinking about that. Furthermore, at this point in time, there's a lot of misclassification that occurs. So whenever there are reports done on unemployment, for instance, the Bureau of Labor Statistics doesn't capture gig economy workers at all. And then there's this issue of misclassification, as I mentioned, where there are gig employees. There are also independent contractors, which I guess were like the predecessor of gig employees or the gig economy as we know it now. So we have to think about these changes. So the infrastructure, it's already crippling, but now it's changing now. And so we really have to think about what needs to be in place And as mentioned earlier, when it comes to unemployment insurance now, especially, there's a lot of backlog, and a lot of that's technological. So there has to be either a unification of UI, which would be in the form of federalizing the UI system, or when it comes to PUA. And so we have these discrepancies that are occurring that are being amplified more so by the pandemic. Currently, we see a lot of overestimates, especially with Black and Latinx folks when it comes to unemployment. And I think a lot of these folks are in the front lines of work, and that includes the gig economy, that includes these misclassified occupations that are not being captured, that are not as highlighted within the 30 million that have lost their jobs. And I think, if anything, COVID has really helped in aiding to see that a bit, because now folks that are contractors, that are gig economy workers, have the opportunity to do so. But I think the challenges are the processes that occur in technology to actually address these issues. In addition to that, like mentioned before, we have to think about having at least some sort of maybe UBI at this moment, especially because anecdotally speaking, I know way too many people that are still working, especially my age, and according to some of the studies that have been occurring at EPI, we see Latino men in particular being a large part of the labor force, and Latino workers altogether. But in addition to that, Black workers are really experiencing heavy unemployment losses, and oftentimes we'll see in like communities of color or workers of color that they have lost the one sole source of income that comes into the household. So now there's a question of what to do next. And before the pandemic occurred, the Federal Reserve Board did a survey wondering or asking whether families or individuals could take on a $400 unexpected expense. And we see that mostly communities of color, Black and Latinx folks, and those with less education are much more vulnerable to those expenses. So it's important to really think about what to do next. And I think it's important to adapt the economy, not just like on like a personal, or I guess business perspective, and optimizing business, but also protecting the worker, because the worker in general is a very vulnerable person or entity, right? There's no leverage relative to the resources that firms have in general. And we see that now, especially with like work at EPI, where some calculations for gig economy workers like Uber or Lyft are roughly around $9, which is still more or less the same in an entry-level job of sorts. And those folks are still getting benefits, even though it might be something more retail related versus gig related. But those folks do deserve the protections that employees get, because essentially they are employees. They are working, and I don't think it's fair to put people's lives at jeopardy. Outside of being a PhD student or a policymaker, we need to think about how to preserve human lives, especially now since we're losing 140,000 and counting, unfortunately, right? But essentially, as an economy changes, we still don't know what a gig is per se. The Bureau of Labor Statistics doesn't exactly have a clear-cut definition. It's a project that's mostly online, but Uber and Lyft are not online. So what happens to them? So this is why whenever we think into account different aspects of work, we have to really consider employees of this nature that aren't being thrown into the data, right? But yeah, that's all I have. Thank you.
Thank you, Felipe. And I think Megan has a few poll questions for the audience that we can do now before we get into the questions for the panel. So Megan, would you like to do those? Wow, so yeah, just giving everyone a moment to scroll through those. This is really interesting to see how widespread these programs all are, you know, maybe with the one exception of workers' comp, even that's 50-50, but that almost everybody knows someone who receives or has received Social Security, unemployment, Medicare, Medicaid, or the ACA. And I certainly do. Well, that's a great way to kind of think about how we want to shape these programs moving forward. And I think, you know, one theme that I picked up, you know, the three of you really had some disparate topics to cover, but there were so many common themes. And one of them was certainly how this coronavirus crisis has impacted the way that you think about your work, the way that you think about social insurance, and how we might reimagine it. I know for myself, it has certainly changed the way that I think about things. And one example of that is, you know, I thought it was so interesting how Sam used the infrastructure analogy. And one kind of rallying cry right now among childcare advocates is childcare is infrastructure. And I'm a mom myself. In fact, my child just interrupted. I apologize, Felipe, during Felipe's presentation. And living without childcare, as we are now, has made me see that childcare is such an important part of the functioning of our economy. You know, 1 in 3 American workers have a child under 18 at home. And, you know, younger children, in order for their parents to work, need to be in childcare. Older children are in school, which does function as childcare along with many other things. You know, we're kind of understanding better, I think now, all of the roles that schools play, not only in educating children, but also in supervising them, and also in making sure that they're in a safe place all day, making sure that they're up to date on their vaccines and all these other things that we sort of otherwise took for granted. And so it made me start to think about, well, why did I just kind of accept that childcare is an individual responsibility to be, and I'm talking about younger childcare, to be taken care of on the private market, where you go and pay a you know, often a small or an individual provider, or where you you know, you cut back on your own hours. And I did both of those things. But why is it when childcare is so necessary to the functioning of our economy and to you know, the raising of the next generation of children, or as some people prefer to see them, workers, you know, why isn't this seen as a public good? And why isn't this something that's available universally and affordable universally? So that's one thing that that's really changed my thinking during this time. And I would be very interested to hear what all three of the panelists, you know, how you're thinking about social insurance and your work has changed over this time. Oh, and we've got some more poll questions. So if we want to just take a pause and answer those poll questions, then that will give our three panelists a moment to think about that question. Great, and this is interesting because it goes, you know, beyond social insurance and into financing, which I'd like to ask some more, you know, with the taxes. I'd like to ask more questions about financing coming up. So panelists, who would like to jump in on how the coronavirus crisis has changed your thinking about social insurance?
I can, and maybe let Walt pick up on this too. hasn't really changed my thinking per se, but you know, in my work, I try to engage with conservative members of Congress, people who are sort of non-traditionally interested in these things. And you know, we put out a paper last year, sort of describing a vision for universal health coverage that had some conservative bona fides. And at the time, we briefed a number of members of Congress, and there was some interest. But since COVID-19, some of the people we originally briefed have reached back out to us to start working on some ideas, because they recognized with the sheer amount of layoffs, the perversities of having healthcare be provided by your employer. And I think there are a fair number of people on the right who are updating their views on social insurance, and maybe not even social insurance, but sort of updating their views about the status quo. In the case of healthcare, the fact that 1 in 2 people get it through their employer, that, you know, the $600 benefit that you're getting on UI might pay you more than your wages, but definitely does not pay you. It definitely does not offset the health coverage that you may have lost. And so there's I think a growing wake up that these things aren't sort of optional, that and that we can't let you know, partisan differences get in the way of fixing the bridge that is now collapsed on top of us.
And Walt or Felipe, do you want to jump in?
Sure. I mean, I'm not sure that the COVID-19 pandemic has necessarily changed my thinking on social insurance so much as amplified my belief in the importance of it. But that is a change, I suppose. But it certainly has increased my belief in the importance of it, and the need to kind of think about how we can. I think there's a real need to think about how we still kind of talk about the value and the meaning of social insurance, you know, and maybe that is through new approaches to thinking about how you provide benefits. But I do think that making that case for what it is and why it's so important is absolutely essential right now. And I do think there is an opportunity for that conversation to grow and increase.
Felipe, do you want to?
Yes. One of the discussions that I think has helped me kind of amplify my championing of social insurance has been looking beyond the data that we generally use at EPI, kind of questioning it even further than what we see now, and trying to find new creative ways instead of what's given to us, because it's not the full picture, right? And I think on a personal level, it has become a stronger thing for me, because I think like economics principle, we think about how the worker can interchange between firms to work for, but in real life, everything isn't equal, you know, ceteris non-paribus in terms of what benefits we get when we jump from one employer to the next. And in order to really level the playing field, when it comes to worker decisions, or just in general of the idea of having people just have the option versus not having an option at all, because as we are staying home more often, I don't think all of us are liking that. And I think that really speaks to the option of having access to all these resources unless you're working, you don't have access to, or working in the traditional 9 to 5. So it's really sparked a lot of fire in me when it comes to these topics in my work.
Yeah, that's great. And audience, please, if you have questions, put them in the chat box and we will get to those next. In the meantime, I would like to ask another question of the whole panel. I thought that Felipe's presentation brought up some really important questions of racial disparities, which are so important right now as we're having a national reckoning, you know, about racial justice in this country. And furthermore, Felipe talked about, you know, who's left out of social insurance. who doesn't, pay, like gig workers aren't paying into unemployment insurance and aren't paying into Social Security for the most part, and so they're not part of these systems. And not only that, they're not part of employer benefit systems and workplace safety regimens and things like that. And so I think those two questions are very much interrelated. And furthermore, Walt really brought to light some of the issues for people with disabilities and people in need of care throughout their lives, whether it's young children or people with disabilities, elder Americans. And so, yes, I guess I would just, and all of these issues intersect. And that's why I wanted to kind of bring to light, as part of our conversation about racial justice in this country, we're rightly talking not only about race, but all of these intersecting factors of gender, of disability, of income, and how they all work together. And, and that is a conversation that we're having in social insurance circles as well. Who gets left out of these programs that are often based on, market wages? How does it work when it, a replacement rate is based on your past earnings, or coverage is based on recent employment? So I would be interested just to hear, what you guys think about how the future of social insurance should be influenced by these conversations we're having about these different issues of inclusion and justice.
I can speak to that on my favorite pet issue, which is universal child allowances. I think, in the abstract, first of all, the concept of social insurance is a bit different than, pure sort of egalitarian take from the rich to give to the poor, which sometimes is called redistribution, right? So in some ways, social insurance and redistribution, they're not opposites, but they are different concepts, because social insurance insures against certain risks that even people in the middle class could go bankrupt from if they don't have insurance. But if you pull back a bit, you start to realize, well, actually social insurance is just this more general, it fits into a more general class of public goods that fix some market failure, or complete the market that the private sector isn't providing. In the case of child allowances, for instance, you could make the case on first blush, so that looks like redistribution. We're giving everyone with kids money, and there's a case to be made that on some level, child poverty, which is much higher in the U.S. than in other countries, particularly in Black and Hispanic households, that's just redistribution. On the other hand, you can think of it in a different way, which is that people, whoever's poor in a given, whoever is counted as below the poverty line in a different point in time changes. It's not a static group, and often the reason poverty has a correlation with children, and also with single parent households and things of that nature, is because people have kids in their early 20s or early 30s, but you don't reach your peak earning potential until your 40s or 50s. So there's this inherent gap, in where you make your most money and when you have the most expenses. And in some ways, a child allowance can be thought of as sort of smoothing that income across your life cycle. So there are people, middle-class people, who would, also benefit from having a child allowance, because early in their life, when they're 23 years old and they're having a pregnancy, they aren't they definitely aren't rich, and there's a chance that they won't be in that category later in life. But the other important thing about universal child allowances from the racial equity perspective is that universality, right? So if you take the American Family Act, for example, which is a proposal from Michael Bennett and Sherrod Brown, the benefit for young kids in that proposal is $350 a month, which right now which would be larger than the average cash assistance in TANF. The difference, though, is that TANF, as a means tested welfare program, comes with all these strings attached. It comes with not just wraparound social services, but drug testing in some states, and work requirements, and myriad other things. And that the fact that that we have this separate system for low-income parents of children it channels people, it channels low-income people, but they tend to be Black and brown people, into a separate system where we feel entitled to impose all kinds of social controls and surveillance measures. And it's a bit of a misnomer, right? Because there are people who really need wraparound social services, that they need caseworkers, they need more dedicated support. But then there are people who just have kids, and they have a lot of expenses, and they can't go back to school to get a high earning job because they got all these expenses. And we should be treating those two cases differently. And the nice thing about child allowance is, on the one hand, you could say, well, this is a move away from a targeted policy based on race. But on the other hand, it's going back to that word that someone brought up earlier. It's mainstreaming. It's pulling a population into a common program, such that the middle class family and the low income family are receiving the same benefit, and that can have a very salutary effect on the social dimension of race.
Yeah, that's a great to illustrate it with a very particular example. And Felipe and Walt, would you like to weigh in on this question?
Sure. So I think there highlights the need to think about a number of gaps that exist in social insurance. Just as an example, I'll go back to the family caregiver issue. There are many family caregivers, are not a part of the formal workforce. They're either not, and they're certainly maybe not being compensated for the work they're being provided, that they are providing. And by not being compensated, they're also definitely not paying into, say, Social Security, and that has a major kind of long-term impact on their kind of retirement and economic security long-term. And a disproportionate amount of these family caregivers are largely women, and also from ethnic and racial minority communities, and so there's this really disproportionate impact here. So I think this is just one particular example of a gap in social insurance and Social Security where we really need to kind of focus on how we can kind of address those gaps, and perhaps think about other ways that the populations can be included into the social insurance programs and have access to the same benefits and really address that. So that's what that's, yeah.
That's great, yeah. And Felipe, I know you addressed this too. Do you want to weigh in a little bit more, or do you want me to move on to the next question?
No, I'll go ahead and weigh in a little bit more. I think one of the things that there's pushback about any kind of social insurance is this idea of moral hazard. And I think we have to destigmatize the idea of social insurance and people gaming the system. And I think part of that is this idea of, well, there's a lot of, it's mentioned earlier, there's a lot of borders of entry and surveillance that occurs through TANF or WIC or SNAP that make it very difficult and almost more inconvenient at times than just, trying to make ends meet in either food or medical services. And getting away from those notions of moral hazard. And there's studies that prove this in European countries that show that, there's no real moral hazard to really be thinking about or to be worried about, because if everyone's happy, everyone's more or less in a sustainable place, even though it might not be at the same starting point, if you will. When we speak about discrepancies with first generation or folks that are from different parts of the world to make a better life for themselves here, or folks that didn't have the ability to generate wealth through racial disparities and racism altogether. There can be an overarching, I guess, goal to mainstream this idea of social insurance from all sectors and all places and all people. But that's all I got for this.
Great. Well, thank you. These were fantastic and very timely responses, and it's really been a really great panel. And now it's time to move into breakout rooms. So you should all be getting notifications on your Zoom